All right, welcome everybody. Back to our Wednesday series now. We are today talking about something that is on Hatch's home turf, which is finance in aquaculture. We have today with us Clark Thornburgh, who is the head of corporate development at Whole Oceans, as well as Todd Crescenzo, who is the managing partner and co-founder at Varuna Capital. My name is Moritz Mueller. I'm the head of marketing at Hatch, and I'll be moderating today. And we're going to jump straight in. All right. May I ask you, Todd, for a little intro? Tell us about what you do. Tell us about who you are.
Sure. Yeah, as you said, Todd Crescenzo. I'm with Varuna Capital. I'm a co-founder and managing partner. A little bit about Varuna Capital. We are a growth capital, private equity-oriented fund. We are out in the market currently raising capital. We will be deploying capital through the fund structure in the aquaculture space and sustainable seafood in general. I'm sitting here in California today, and Moritz and Hatch, thanks for the opportunity to be here. So really appreciate it. And over to Clark.
Clark Thornburgh here, also very happy to be here and also in California. I'm head of corporate development for Whole Oceans, which is a development stage land-based salmon facility that will go up in Maine. We're part of a larger group that has an operating site up in British Columbia, also producing salmon, and PR Aqua, which is an aquaculture engineering group.
All right. Thank you, too. Thank you, Todd and Clark. Let's dive straight in. Todd, first question goes to you. To set the stage here, when we spoke first a couple of weeks ago now, came up with the idea to do this webinar, you mentioned this idea of let's go back to the first conversation you always have with an investor. So the why, the how, the why exactly you and why exactly now. And I'd like to hear that again from you for aquaculture.
Yeah, for us, I think it always starts with the investment thesis. As we sort of speak with potential LPs, potential investors with Varuna and who are looking at this space, we really like to lead with the investment thesis. And that's really, I think, the why. And the why is, I think it's pretty clear. There's structural demand and supply imbalances in seafood protein, and that sets up for a really long-term trend in sustainable growth. And so, within each niche of aquaculture, there's certain specifics, but in general, we know that global demand through population growth, expanding middle classes, developed countries' consumer preference shifts are really driving significant growth in seafood protein demand. And it depends on the species, but in general, it's far outstripping the supply. The supply is structurally very hard to move given wild fisheries have been overfished. And so that's the structural supply demand imbalance that sets up the investment thesis that is, we think, really strong. In terms of the how, I think this has been a challenge in a lot of ways for aquaculture, is how to express that investment thesis. And that's a function of a lot of different things, but first and foremost is some of the complexities within the industry. There's the complexities of, what Clark is doing, which is land-based RAS, which has a very sort of industrialized profile. Then there's oceans net pen-based aquaculture, lakes-based. There's a whole host of different ways to have exposures in aquaculture, but they all are pretty complex. And so you need a skill set to really be able to identify, first and foremost, the teams, right? I mean, execution in this investment thesis is really critical. And that's just the production asset side, right? I mean, the industry really has a lot of sub-industries within the vertical that are fascinating, companies that really sort of look and feel more like technology and biotech companies. So it's a highly diverse and complex industry that requires, we think, patient capital, a broad team, and this is now kind of getting into maybe the why Varuna or why other groups, but you need a strong team to execute the investment side, but also at the portfolio company level. So, for example, Whole Oceans, you need a good team, you need good entrepreneurs around you, both financial and operating. And that's what we bring to the table. Long-term patient capital perspective. We've got a strong team. We've spent a lot of time really thinking through what strengths we need as a team to succeed in this space. And that's everything from strategic partnerships that we've signed with the Bren School at UCSB or Conservation International, to our advisors, really trying to find advisors that have deep and broad experience across not only production assets, but marketing, sales, because this is, like I said, it's a very complex business. So from the Varuna perspective, we think we've set that up. Obviously, the proof will be in the pudding over time, but we hope we can convey that confidence and ability to identify key assets, key teams, and deploy capital in a way that returns meaningful investments back to our LPs.
Right. Thank you, Todd. You already mentioned Clark and Whole Oceans here. So over to you, Clark. You come from more the private equity side. You have extensive experience in M&A. You've done some very, very big deals, or were part of a few very, very big deals. What brought you into this field?
I think it really started as a kid, of course, fishing like everybody else. But when I was 15, I went on an outward bound trip to one-day service project, which was on a salmon hatchery. And so I've always had that in the back of my mind, sort of fascinated about this industry. And I didn't really get into it, but I spent about 10 years over in China. And of course, in South China, you can see aquaculture all over the place. And I think as I was there from the early 90s off and on up until just about 5 years ago, the pollution was getting worse and worse and worse. And there was always something in the back of my mind saying, this industry would be really interesting. And why aren't we doing it in the US? Particularly growing up in the Midwest, I'm from Chicago. We lived within a 5-minute walk from the lake, but we never ate fish from the lake. So as I was sort of looking for something else to do outside of advisory, through networking, I learned about a couple of different land-based aquaculture projects. And the first one that I worked on was freshwater eel, in terms of being capital intensive industry that's global, but in order to get off the ground here, it was very, very local and complex from the regulatory side, sometimes pretty opaque from the supply demand picture. It had all of the challenges that I enjoyed during my mergers and acquisitions days and allowed me to get on the principal side. So it's really combined my early supply chain management years from the China days plus the finance side. So it's been very challenging but satisfying so far.
All right, thank you. Can you add a little bit about in which setting Whole Ocean operates from a finance perspective?
Right, that's a good question. So as I said, we have the Whole Oceans development stage project in Maine, and then of course there's Kutera in Canada, which is already operating, but also needs some expansion capital, and then PR Aqua. We're backed by a major U.S. hog producer based in Iowa. So that group has been financing us up to this date. So we're also in the market raising capital to get to the next level for Whole Oceans specifically and for Kutera. So we've approached this problem from a couple of different angles, talking with some major strategic groups out there who already understand aquaculture or agriculture, and then of course speaking with funds who already understand aquaculture, and if not, they've at least gotten over the hump in terms of the high capex and the 3 years that it takes to begin generating revenue, with one of these facilities. I don't think there's any magic wand that can help a group like ours get off the ground. And so we've really started from the broadest perspective possible, and we've narrowed it down over time. Whole Oceans has been in the market in various ways for several years, so we're a pretty known quantity. The management team has changed a bit, so the story has changed a bit. But yeah, so we're attacking it from all angles, and we've had some great success so far, and we're confident that we're going to get there.
All right, good to hear.
And
so
the only other thing I was just going to add that, like any large facility like this, with no liability with equity first, and then bring in some type of debt closer to cash flow positive.
Yeah, right. Yeah, I'm actually going to pick that up later again and get a little bit more into the actual finance structure. Right now in America, or especially in the US, the executive order in aquaculture is still a topic, and is potentially moving the sector, or turning it around, giving it a completely new direction, new chance, or maybe not. And I would pose that question to you. Is this EO pivotal for the sector, or is it more of a motivator and something that mainly brings attention but not that much structural impact?
Yeah, great question. We generally view it as a very positive development, just from the perspective of the administration and the country sort of identifying, really the seafood industry, the terms of trade for the industry. 90% of seafood product is imported in the U.S., right? So we see this as a general positive. As most things, the devil will be in the detail. But Margaret Henderson and the SATS group have been working really hard. And so it is an absolute positive. It is focused more on the offshore aquaculture side, right? So for Whole Oceans and more lakes-based in inland waters, it is very specific to the offshore. So when it comes to offshore aquaculture, we actually think it could be really a strong catalyst to essentially you're right. I mean, offshore aquaculture has been, largely done in commercial scale and around the globe, but it really hasn't been done here meaningfully in the U.S., except for some select places. And so, in such that the executive order can turn into smart strategic policy that sort of really balances the commercial interest of all involved and also the environmental components, taking a stakeholder approach. We think it's an absolute positive. Is it the silver bullet to, have a bunch of capital flow into the sector? Probably not at this juncture. We have potentially administration change, or, an election in November. We're not sure what's going to happen, but certainly there's still policy risks. The spirit of the EO is really great. Streamlining the permitting and regulatory component of this has been one of the, highest hurdles for the offshore aquaculture industry. And that is really been a challenge to financing those projects because, as Clark was saying, these are capital intensive projects anyway, right? There's a lot of CapEx and investment that has to occur up front just to get to producing cash flows. You layer in the offshore aquaculture regulatory burden, which in some cases, there's projects that have been in the works for decades. That is not financeable. And so that the EO turns to policy that incorporates one governmental agency, potentially NOAA, it looks like, to sort of streamline this. Yes, that's a very strong positive. I think something we'd like to see is a broader stroke to some of the other seafood producers in terms of aquaculture, whether that's lake-based, inland waters, and land, and really think about this holistically and in terms of a domestic industry that has a ton of potential. That's, kind of exciting to think about.
Yeah, thanks, Scott. Clark, what do you think?
Yeah, I agree with right direction. And it's aquaculture is an industry that has not been part of our vocabulary for quite a long time. And there's a lot of constituents involved. So the fact that the federal government is even looking is really encouraging for us, and I think for everybody else. Regulatory risk is not financeable. Hopefully there will be some continuity in NOAA, and they'll continue to address these challenges. I think from our perspective and a producer perspective, just having the attention is helpful, and hopefully there will be some marketing support from the federal government surrounding the realities of land-based or any type of fish farming, aquaculture, done correctly. Hopefully it can be cast in a better light. I think there's a confusing message out there, and Americans really don't understand it very well, since we, like Todd said, we import 90% of our seafood. We have no idea where it's from. I think the federal government could also probably help out from the standards perspective. That's a real problem in this industry, and it's a very boring topic, but traceability and definition of the product and the species and everything along the value chain, I think that's really, really important. And I think we're good at things like that, and we can be a global leader. We're behind other countries, I think. And yeah, I mean, it's a step in the right direction. We'll see what happens, and we're trying to be as supportive as possible. We have an open dialogue with the regulators, and yeah, we're encouraged for sure.
That's good to hear.
I think I was just going to add the traceability component of Clark's discussion, I think, is really key, right? I mean, I think of any food that we as humans eat across the globe, seafood is one of the most just not traceable, right? I mean, you don't go into a store and say, oh, where's that salmon from, right? In some cases you do, and there's been some branding around it. But I think in this post or COVID-19 world, it's certainly not post, I wish we were, we're getting back to eating more at home, right? And, if you look for the demand for seafood in this COVID-19 period, it's skyrocketed, right? And a lot of that is frozen. But that said, the shortening of supply chains, the traceability, forget the politics of China-US relations in terms of trade for a second. I think there's going to be a real lasting impact from COVID-19 that looks to domestic suppliers. And effectively that's, on the aquaculture side, the fish farm side, that's challenged again at that marginal supply component, right? I mean, wild catch is there to a degree, and obviously certain species, but that is something I think is going to be a real catalyst to, as we talk about investment dollars flowing to the sector, not only at the producer level, but companies that can address these traceability challenges from a technology perspective and a monitoring perspective. So again, to the breadth of the opportunity set, it really sort of is up and downstream of the producers, and COVID-19 presents puts the investment thesis of food security and supply chains higher in the discussion points pre-COVID-19, right? And so it's all related, but I think that was a good point on traceability, Clark. Thanks.
And I would also add that I think the traditional protein producers have a lot to offer when it comes to addressing this problem. I mean, I can say from our perspective as a pork producer, we were very early in biosecurity, and some of the swine-related issues that have come up over the past 10 years, we've never had any of them. And it's not that hard to apply these lessons to all forms of seafood. And I think the US is definitely a global leader when it comes to this type of thing. Regulation on the ground, look at what's happening with swine flu in some other regions. It does not exist here. And I think that speaks well for our ability to tackle this problem, but the industry and professionals here and great minds, et cetera, the government just haven't been given this business problem yet. And so now that the government's opened this up for everyone's, consideration, I think that's a great thing, and we'll see people mobilizing around this challenge.
All right. Thank you both. To move on and back on the topic of finance just a little bit here, Todd, Varuna is raising money right now. And in former conversations, we mentioned between you two, actually, or between Varuna and Whole Oceans, lies a whole lot of synergy. Would you like to elaborate on that a little?
I would love to, cut Clark some checks, which means we've closed our funds. So we are still in the market raising capital. And certainly land-based RAS systems are something that we see as a key component to what we sort of think of as a portfolio of producers, right? Not one production is absolutely scalable and the best, and you have different teams at different production asset sites. So as we think about it from the Varuna perspective, in a fund where we want to be diversified across species, across production methodologies, across technologies, certainly land-based RAS is something to consider. As sort of this discussion talks to, it requires patient capital because of sort of the long duration, long tail aspects of these projects. That doesn't mean they're not financeable, but it really comes down to, kind of where we started this conversation, the right team, the right species, the right sites, and the right partners. And when we think of partners, it's definitely part capital or financial partners, but then also strategic partners, because this is such a long game. And I think Clark's spot on that the parallels of other protein industrialization sort of timelines can be borrowed, right? They could be sort of a business case study. And, that said, within aquaculture, there's some really small boutique producers that warrant capital as well, right? And so on one hand, you have the industrialization element of this that's fascinating, that's really long tailed. And then you have some of these niche producers, whether that's niche in species, right? I mean, or just location. And so from our perspective, we want to be diversified. And, we're excited about land-based RAS. So in that Whole Oceans continues to develop, we want to remain friends and continue conversations.
Right. Thank you, Todd. Clark, from your perspective, why would you want to have Todd on board?
That's a good question. I think matching investor requirements in terms of patience versus what the organization can accomplish is really, really important. So when groups like us or the smaller groups go out there and try to raise quite a bit of money and say, well, we're not going to be cash flow positive for 3 or 3.5 years, traditional venture can't really support that. And then, of course, growth capital, there's not really a role for it until you're in business. And then traditional buyout. And then if you move over to the traditional project finance that you see in energy and oil and gas and other industries, well, that we don't quite fit in there either, because you don't have these long-term customer contracts against which you can borrow. And then, of course, the equity comes in underneath. So it requires a very focused group who understands the industry and who's able to work potentially up and down the capital structure to help groups like ours get into business. And also, of course, there is the sustainability component, the ESG component, and there is a shortage of sizable ESG check the box type projects in the US. Getting the people who want to invest in those to groups like ours requires groups like Todd's and a handful of other aquaculture or agriculture focused funds. I think this is the fourth group I've worked with in this industry in the past 3.5 years. And each group I worked with went at this problem from different perspectives. And I don't think any model was perfect, but one was the just go to ultra high net worth people and get them to write a check. The other was, let's try just venture, get into business, and then bring in some growth capital. The other was a traditional fund that was only focused on salmon aquaculture. And rather than species diversification, they were geographical diversification. And I think now that I'm on the fourth one here, I think partnering with a fund and or a strategic who's already operating in the region and who really understands the challenges of building these types of facilities and understands the end market and has the ability to work with an independent group like ours to help groups like Todd's help their clients is probably the way it will work. We're not sure yet, and there's no, we're not done with our process, but we're learning every day that it requires different groups of people who address different problems within this problem to get this done. So,
yeah, I would just add, or sort of enhance that. Look, this is about people, right? I mean, at the end of the day, we know the problem. We need to provide more protein in a sustainably sourced manner in the future, right? We need to take the sort of biodiversity pressures off the oceans, and so we know what the problem is. I think generally humans are great at solving problems that are solvable, and land-based RAS is something that is part of that. However, because it is so complex, it does really take the right partnership from the executing operating team to your capital partners. And to Clark's point, I mean, what we're hoping to do at Varuna is be that partner for the right operators and be patient and be part of what we view is, and I think Clark does as well, and Moritz, I'm sure you do as well, which is essentially an industrial revolution in a sense in seafood protein for land-based RAS. I mean, this is kind of like the auto industry as Henry Ford was thinking through it, right? And so there's always a lot of unknowns. You just have to make sure you're compensated for those risks. And as you look at these models, the spreadsheets, they're reasonable, right? But there's a lot of execution risk, and that comes down to the people and the partnerships.
And the one thing I'd add on the the return side, I think that RAS, at least in this country, has had a difficult reputation for a lot of reasons, because it's really expensive to build one of these facilities. And if the sale price for a species doesn't support return of capital in a reasonable amount of time, it just doesn't. And you can't force that to happen, no matter how much value-added processing you add to a low price fish. It just doesn't work. And I think that's on the industry collectively here to figure out how to bring down the costs of land-based and of course open net pen and wild catch. I mean, we're all facing the same challenge that seafood is just too expensive for most people. And, like Todd said, we're just scratching the surface of this problem. I think, I hate to use this word, but high density farming is a relatively new industry. It took the chicken farmers about 30 years to figure out how to be economic and also at least make moves towards animal welfare. And I think since we read so much about these big tech investments and there's some sort of magic solution that happens overnight and all of a sudden everybody has a new habit, unfortunately, we just can't do that in this industry, or at least we haven't seen anything that enables that step change in this industry yet. So we're working on it, but it's just not going to happen overnight. So,
yeah, great point.
Yeah, thank you both. I just want to remind our audience that we'll be going through one more question from my side before we will take your questions. So please feel free to submit them in the chat, whether on YouTube or you're on Facebook. Just write them in there. My colleague will forward them to me. All right, to wrap up our part of the conversation here and discuss, aquaculture produces about 55% of the world's seafood, but it's nowhere near as much on the radar for investment as it maybe should be with that massive amount of value it creates. Why is that? And where should the money go? What's the strongest play right now? Do you think it's more in the auxiliary services area? Is it more on the farming, or are we focusing, or do we need to focus on the technological innovation now?
Can I say D, all the above?
Yeah.
Try to prioritize it.
Yeah. I'll kick it off. Yeah, look, I mean, aquaculture, fish farming has been around a long, long time. And there've been a lot of people in the US who have been trying to sort of crack the code for a long time. And, I just want to thank them, because I think we're at a very interesting inflection point that gets back to where we started this, which is this supply-demand imbalance, coupled with some other aspects that are sort of putting this industry, particularly here in the US, in the limelight it deserves. That said, the Norwegians, the Chileans, the Canadians have been doing this commercially a long, long time, and their cost of capital is very low. And so from an ecosystem perspective, a lot of capital has been centric in those geographies. So it's not that capital hasn't been in the space; it has. It's just probably had a little more of a global focus, and relative to the U.S. The other element of that is Asia. A lot of production comes out of Asia, and again, they've been doing it a long time too, and the cost of capital is relatively low. So I think it's just fine tuning a little bit. The capital's been there. It hasn't been there in the U.S., which gets us to the EO and smart policy and some of the catalysts that we think really should and could drive the capital that's needed to develop this industry on all aspects, offshore net pen, land-based, inland, et cetera. In terms of opportunities, this industry, and back to the kind of the joke of D, like there's so many opportunities, right? And a lot of it is sure at the production level, in species that are very unique, tend to have a commoditized cost curve and more of a sort of premium output pricing. Those are sort of generally interesting. But just the companies that maybe are being born or grown out of the aquaculture industry, but have multi-industry applications, those are really fascinating from a scalability and commercial standpoint, right? And whether that's monitoring in open water net pens, right? I mean, there's certain technologies out there that look really interesting that could be utilized in maybe offshore wind farms, right? Or different industries where you're not someone adopting you in your industry, but it's cross-industry applicable. The other area, which I'm sure Clark can chat on, is feed is such a huge part of the cost structure. There's a lot of innovation on the feed side that's fascinating, right? And animal health in general, but feed's pretty compelling. And I think a lot of that is from the consumer's preference to sort of, back to this traceability, really understand, okay, not only where the fish are coming from, but how are they being grown? Is it in a sustainable manner, right? And I think there's changes going on in the feed industry that are helping to address that again, potentially have sort of cross-industry application that are pretty fascinating. So at Varuna, we're trying to look at all of those sort of sub-industries, again, as we think about it sort of up and downstream of the production assets.
Right. Thank you, Todd. Clark, you want to add on that?
Sure. I agree with what Todd says, and I think it depends on the individual investor's ability to write a check, risk appetite, and expected returns. I do think that there is quite a bit of capital in this industry, but we just don't see it in the U.S. you have the Norwegians and the Chileans, of course, but then the Japanese, Koreans, Chinese. There are massive, massive organizations, some of the largest trading companies in the world, who generate an awful lot of income from aquaculture, but you just don't see it. I think if I was, if you have a global mindset, looking to some of these highly integrated trading groups that have the capability from end to end, from feed to end processing, probably make a lot of sense. But then again, you need to have a very global mindset in order to understand these companies, and you have to pay attention to them very, very closely. And their reporting is not quite what you're used to in the US. And so as a retail investor, I mean, it's almost inconceivable that you would invest in them. I think, I mean, it's such a difficult question. I think domestically, we need to look at all of the above. Yeah, I wish I had a better way to characterize that, but D. I'm going to stick with that one.
D. Okay. All right, let's open up the questions towards the audience. The first one is coming from Isaiah. He is asking Clark, we recently read a letter from Stronger America Through Seafood pertaining to the Aqua Act and the recent executive order. We feel like the legislative pushes are focused on the offshore space. What groups are advocating for the interest of land-based permitting process in the United States?
Yeah, I wish I had a better response to that. There are not many in terms of pressure groups or lobby groups that just have come out of this industry. We're part of a consortium of mostly startup land-based producers who are working with NOAA to determine how the government can support this industry. And the answer is we really don't have much of a voice yet. The big lobbying money comes from different parts of the industry. And so it's a hole in our industry at this point. I wish we don't have much of a voice yet.
Right.
Clark, I just would throw out there just kind of, sort of catalyze a conversation a little more like on the land-based side. I mean, maybe it'd be helpful to kind of talk to that question in and around jurisdictionally. It tends to be more state regulated. Obviously, there's federal components to it, whereas the offshore side is complex between state and federal. It sort of depends on when you finally get offshore, where you are, but generally it's federal. And I think that might be, an important point to sort of highlight in regards to SATs. I mean, I don't know what you think about that, but.
Yeah, and yeah, absolutely. And I meant to add that certain states have aquaculture industrial development plans. Michigan is the one with which I'm most familiar, and land-based is a big part of that, just because the Great Lakes are pretty much off limits. So absolutely at the state level, there is some interest to move forward on this. And unfortunately, there aren't that many examples of facilities that are operating well and at a scale that allows them to be in the spotlight, but also attract the kind of backing that the broader industry already has in order to face the challenging behemoth of the federal government or even at the state government level. I mean, lobbying is that requires some attention and some capital. And so if we're focused on just getting into business first, that next step of interacting with the government, I think it's in a lot of minds, it's been a couple steps away, but yeah, agreed.
All right, thank you both. A question from Suzanne. Kutera, which is an Atlantic salmon producer in Vancouver, is an indigenously owned company. She's asking, does it have any effect on ethics of who or where you can seek finance?
It's a good and complex question. The answer is yes. I think everybody is familiar with some of the discussion up in Canada about land-based versus outdoor net pen. And certainly from the First Nations perspective, and I am no expert, so we should verify all of this, but there is absolutely the movement towards land-based, and yes, the answer is yes. If we're restricted from a certain perspective on this one, I think we'll just have to leave it.
I could add kind of just a general thought, which is, I think back to Clark's earlier point on ESG allocations, particularly from institutional investors. The S kind of comes into play there. We've looked at a few deals that involve the First Nations. And so when done correctly, with sort of a real stakeholder approach, capital, and obviously the returns have to be there, right? But from the perspective of ESG, we've seen some structures that have potential to, for us from Varuna's perspective, sort of, be a capital provider partner, looking through that lens, right?
Right.
Yeah, okay. And I think one thing that Todd likes to say and reminds me about, if something results in less wild fish out of the sea, it's positive. And I think when we approach the source of capital question versus our relationship with Kutera, it starts from that, and it needs to be consistent all the way throughout the process.
All right. There's another question coming from Dakota. New net pens, or like lice and algae. I was wondering what fish health problems then arise as the major problems in RAS as a trade-off.
I'm not a biologist, but I can just say from the top level perspective, it's really about the water quality. So, if anything is out of whack for 20 minutes, depending on how the system is designed, I think most people probably know that the biggest issue is really, rather than fish health, it's really off flavor. And any group who's shipping fish from a RAS facility around the world has addressed the off or has run into the off flavor problem. And there is no magic wand to address this. We are working closely with Dr. Zohar at at the University of Maryland, who has tackled this problem within his smaller R&D facility, and we're applying some of his techniques up in Canada. But there's no real magic for it. I mean, in theory, and it's a biosecure facility. If you talk to Dr. Zohar and you visit IMET, and I encourage anyone who's on this call to, they've got a whole RAS system there in the basement. It's right on Chesapeake Bay. I think he would explain that he does not have fish health issues. So when it works properly, there are almost none. It's the human error side that creates the problems.
All right. Thank you. So let's move on to our last question. Going to Todd. Could you explain more about Varuna Capital's definition of patient capital within the aquaculture space?
Yeah, that's a great question. I mean, structurally, the way our fund is set up, we're a 10-year fund with 2 one-year option extensions. We have a 5-year investment period and then a 5-year investment harvest period. I think we think about patient capital as as being capital partners with the portfolio companies, right? And there's the fund structure, and then there's the business's need along the way, right? And I think to Clark's point earlier, you want to be aligned with your operators day one going in, right? Because that's when things get sideways as expectations get mismanaged. And so with patient capital, we want to be, particularly on the production side, they're part of the equation over a longer period of time. As I said earlier, production assets really tend to be long duration, right? They tend to look like infrastructure projects on a lot of levels. So that's one element of it, which is duration. The other side of it is execution. I think it does come down to a strong team at onset. At the same time, change happens, and you need to manage through that patiently with the end goal of whatever the portfolio company's goal is. To sort of step away from, because I'm sure it's not all producers on the call, to step away from the production asset side and kind of look at other types of company, whether it's in feed or technology or even biotechnology. That still patient approach applies, right? And so maybe it's not quite as long lived in the sense of the asset's life, but I think, really being part of the equation as a company grows from advisory work, management advice, mentorship, and providing capital. It's really a totality approach.
All right. Thank you, Todd.
Sure.
Clark, do you have anything that crossed your mind that you wanted to add? I saw you kind of twitch for 1 second.
Yeah, I was. It's just because my boss called again. That's
okay. Timing is good. We're going to say goodbye now. Thank you all for watching. Thanks especially to Todd and Clark for attending today and answering questions. Great to have you. Everybody who's been watching, we'll see you next week, and we'll tell you tomorrow what's going to happen. All right.
Thank you, Moritz.
Bye, everybody.
Thank you. Bye.
You're welcome. Bye-bye.